If you have a 30-year mortgage, I'm going to show you a number that might make you a little bit sick. Let's say that you borrowed $400,000 over a 30-year fixed. The thing that nobody tells you is you're not paying back just $400,000. You're going to pay back about another $400,000 in interest over the life of that. So the house costs you $400,000, but then so does the interest. It's almost like you're buying the house twice, once for you and once for the bank. So let me show you how this happens and what you can do about it today. And I promise you, I'm not making this up. So here we go. We have a $400,000 loan on a 30-year fixed at a 6.25% interest rate, which today, July 21st, 2026, is pretty accurate. Now, if you look over the total of 360 months, you're going to pay $486,000 in interest. You're actually paying more interest than the entire cost of your loan. And that's not a fee someone hid from you. It's actually on the last page of your closing disclosure when you sign your loan docs. So it's fully there, just no one pays attention to it. So if we go back to these payments, what you'll notice is the first few years, the payment is almost entirely interest. So your total monthly payment here is $2,400. And that first payment, you're paying $2,000 of it toward interest and only $379 towards principal. As you go throughout the year, it doesn't get much better. In fact, kind of a crazy statistic is you won't even pay halfway through your mortgage until the 22nd year of your loan. Even going into year 5 down here, we're still paying primarily interest, and a bank will just tell you that is the cost of borrowing money. And this isn't some scandal, it's just important to understand. The 30-year mortgage was created to help people get into a home, not get out of the loan. It was developed in the 1930s after the Great Depression to help maximize home ownership. A lower payment spread over a longer period of time gave that access to more people. And you know what? It worked. Home ownership became more reachable. But like I said, the mortgage was designed to help you get into a home, not get out of the loan. Those are two completely different goals, and the 30-year fixed mortgage only serves the first one. So if paying less interest over time is important to you, stop relying on the tool that was not designed for that. Start using tools that can help you pay less over time. The good news is there's some options that literally cost you nothing. You can make one extra principal payment per year. You can round up your payments. You can do bi-weekly payments, which in essence turns into one extra payment per year. You can throw your entire tax refund or any bonus you get at the principal balance. Every one of those attacks your balance, which reduces the amount of interest that you pay over the life of the loan. The only problem with that is that it locks away your money, and the only way to get it back is by doing a refinance or a HELOC. And few people know that there's actually a loan that allows you to access the money and attack the interest first. Most people have never heard of this loan, and this entire channel is built around helping you understand it and see if it's right for your situation. And it's called the all-in-one loan. And how it's different is instead of having the interest calculated on a fixed schedule, the interest is calculated daily based on the principal balance. And the real power is that it's combined with an integrated full sweep checking account. So how that works is every single day you have money that comes into your checking account, and that same day it sweeps over and pays down your mortgage. And this works better than any of those other options I had said, because the difference is it's all of the money in your checking account working for you the day it hits. And if you ever need access to it, it's built on a 30-year line of credit over a 30-year draw. So you can pay it down and you can access it at any time. Now, this only works if you're someone with positive cash flow. It's not designed for every person, but for the person that it's right for, it is the strongest tool in the market today because it's the only loan that is designed to help you get out of that loan quicker. It's a principal first mortgage, which gives all of the power to the borrower and not the bank. If you want to learn more about this, go check out another video that I made. I have a lot of different ones on this channel. I also put out new ones every single week. You can also go to the link in this description and schedule a time to hop on a call with me where we can walk through your exact situation, or you can go to the interactive simulator and see if it works for you before we chat. Thanks again for watching. I look forward to talking to you soon.